It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. China's housing ministry briefing failing to convince investors Beijing can turn the market around, with property stocks sliding and mainland benchmark erasing intraday gains. Investors will also be watching TSMC's earnings today for fresh signals on AI-driven chip demand after ASML's shock outlook cut. And some big names joining us live this hour. The Thai Stock Exchange president is with us for his first TV interview since taking the job. Plus, we speak exclusively with Accor CEO Sebastian Bazan. Let's get you straight to markets. Disappointment in China. It's not the numbers they're looking at, and it's just not enough still. Avril Hong. On top of that, we know that the CSI 300 index erasing most of the gains this morning.
Yeah, it is yet another China briefing that has failed to impress investors, and this is coming against the backdrop of them really feeling the heat from the likes of the Chinese president, telling them once again, work towards meeting that growth target for this year. But to your point about what we got from the housing sector briefing, because this, of course, included the housing minister, but also some of these other officials, the Hang Seng actually led gains in the region going into that briefing, but those gains quickly evaporated. We actually even saw the CSI 300 dipping into negative territory against that, and it's reversed some of that at the moment. The rest of Asia, though, looking pretty cautious as well, and this is despite the gains that we saw on Wall Street overnight, lifted by the small caps, the economically sensitive stocks, amid a bit of a sector rotation away from the mega caps. This is as investors look ahead to TSMC's earnings, and this is not long after ASML sent those shockwaves through the tech investor sphere. I mean, just hearing as well recently from the CEO saying that the slow recovery is likely to extend well into next year. And given how those TSMC earnings are going to come after the close in Taiwan stock markets, that reflection of market sentiment might really come from the Hang Seng Tech. Now, when you look at TSMC earnings, analysts point out that it could be a bit more resilient as a company as a whole compared to its key equipment supplier, ASML. But note as well that the stock is running at really high levels. It is comfortably outperforming some of these regional peers just based on what we're seeing on the Bloomberg Asia Pacific Semiconductor Gauge. So you get the sense that these earnings will have to come in almost perfect in order not to disappoint investors. And speaking of disappointment, let's take a closer look at some of the Chinese property names as well, because they extended declines as the briefing progressed, as we did get a number, 4 trillion yuan. That's the amount that the whitelist, that credit program, will be lifted to in order to help the unfinished projects to be delivered to buyers. But maybe what investors really wanted to see was a number on buying up unsold homes. So it didn't deliver in that sense, Hus.
Talk about disappointment. Avril Hong, thank you. Let's bring in Junbei Liu, portfolio manager at Tribeca Investment Partners. Also joining us is Bloomberg economist David Chu. June, let's start with you. Another briefing, another disappointment. Property stocks down a massive 7%.
No, absolutely. It's absolutely another disappointment. China just doesn't seem to get it. What they really need is something large to really boost the confidence. It is the confidence that's being impacted. And this is not just on the property sector. Given the high ownership of the Chinese equities by the retail investors or individuals and mom and dads across China, it's so important to boost the confidence. It is the consumer that is not spending that is creating a lot of issues, and then led to the corporates become more cautious. Then you have of course, the slump of the property that seems to never to be recovering. So look, the confidence has really been dented, and this announcement just not enough to pull them out of it.
David, you heard from June, we need a large number. We didn't get that. You get a sense it is risk mitigation. It is not about turning around the property sector. Is that a fair assessment of where we are right now?
Well, whether we need a big number depends on what we are looking at. If we are looking at the economic fundamental, I think so far the policies are, the policymakers are trying to help the economy itself, but not the investors. Because if you look at the, actually the policy package so far is some kind of larger than what we expected. But obviously, it is much smaller than what the investors were expecting. So that tells us that economists and investors have different viewpoints. So that is why I say whether we need a big number, it depends on who you are.
As an investor, June, that number matters. Is it about drawing a line in the sand? I mean, less bad is not so good. It's not so bad when you talk about this property sector in China.
Look, the problem is for investors, it's incredibly important to actually to satisfy a lot of those investors' expectations, because they set the prices. They set the prices to your share market, set the prices to a lot of assets that need to be sold. So it's so important to have a big package, a number or something that meet the market expectation and beat it, just so that you can arrest the confidence issue. Right now, Chinese economy, it is sitting somewhere in the bottom, and we can see some of a stabilization. But for it to reignite the growth and get to the growth target as they want to achieve it, they really need to reignite their confidence. Not only it's investors, it's consumer, it's corporates. Should that confidence return, we do think the green shoot can reappear really, really fast. So, and the challenge is right now we just don't have a big enough package to really, to get people excited, if you like.
But June, it does seem like China has the sense of urgency. It is moving in the right direction, even though the numbers are not big enough yet. Is it enough, though, for you to perhaps dip your toes, take a look at perhaps buying some of those stocks?
Look, I actually think fundamentally these Chinese companies are very, very cheap. The valuation support has been there for a very long time. And I do think the packages so far, what's being announced, add up over time, should see the improvement, if you like, the stabilization of the market. It certainly represents a tipping point for the Chinese market. But we may not see the hockey stick uplift. It's really, it will improve from here on. Now, what throws in there is, of course, we've got the U.S. election just around the corner, whether there'll be any policies on the trade war and the like. That might potentially throw a bit of volatility in there. But if you take a 12-month view, certainly from the investor perspective, it looks quite cheap. It's just that it's not going to be that hockey stick we always expect out of the Chinese market.
It's not for the faint-hearted, for sure, June. David, let's bring you into the conversation again. We saw how the credit support has been extended for 4 trillion yuan. Some say perhaps, okay, not so bad. But the thing is, if that comes through, then perhaps the banks may be adopting some of those risks. They may be looking at non-performing loans being extended. Your thoughts on that?
Well, I think so far the market has not thought so much about that. The first reaction of the market is to ask whether this money will be bared by the PBOC. Because people are always imagining that, envisaging that China may replay the 2015 scenario when what we called the monetized Sangtitang renovation, which means the PBOC provided the money for the renovation. But so far, the market didn't see the clue that the PBOC is going to provide the money directly. So that I think that is a reason for disappointment. So that is what I think. And for credit side, I think it's still too early for people to think about that.
David, we have China saying that the real estate market has begun to bottom out after 3 years. Do you agree?
Well, if you look at the short-term high-frequency data, yes, over the past 3 weeks, since the end of the last month, yes, the sales rebounded. And we saw the clues that the price also rebounded. But the thing is that last year, same time, we also saw the rebound after the August stimulus. So now the question is whether the rebound can last long. On this side, we need more. To be honest, we need more fundamental side help to let people to buy new homes more.
June, the same question to you. China's property market is beginning to bottom out.
I think the property market is probably bottoming out, but as a listed equity investor, I certainly wouldn't be putting my money into the property sector yet because to me, it's a bit of a value trap for now. I'll be buying consumer, I'll be buying tech, I'll be buying the real beneficiary of a lot of those policy changes is the consumer. And we know these consumer has struggled for quite a long time and their fundamental is still pretty strong. So we would be absolutely buying into those sectors. Property, just there's too much properties in the market, difficult to move past. I think it's going to be a slow and long recovery for that sector.
But June, why buy into consumers when consumption is very lackluster?
That's when you buy them. This is when the valuation represents significant amount of opportunity. Consumer will come back. Their fundamental is strong. Their balance sheet is not too bad. They just very, very bearish. Their sentiment, consumer sentiment is very low because what is happening with property market and others. And with sentiment, it will turn very, very fast. Chinese consumer has yet to reach, did that revenge spending and travel like every other economy coming out of COVID. So we do think, aside from the good tailwind that is to come for that consumer sector, it's the cyclical tailwind coming through as well, and rebound to the level that should be before the COVID, and also the essentially just improvement in the outlook, if you like.
I hope you're right, June. David Chu, Bloomberg Economics, thanks for joining us. June Bailiu, Portfolio Manager at Tribeca Investment Partners, is sticking around. Well, still ahead this hour, more exciting guests as we talk Thailand's surprise rate cut and the outlook for equity markets with the stock exchange president, plus an exclusive with Accor Group CEO Sebastian Bazon on their Asia growth plans. But first, ASML warns that a recovery in global chips markets will be a slow one. We'll hear from the CEO, get reaction from chipmaker AMD, and look ahead to TSMC's earnings next. We've got you covered. Keep it here with us. This is Bloomberg. It is a roller coaster ride for chip stocks on the back of that ASML messaging, seeing slow chip recovery extending well into 2025, not doing well for the likes of TSMC, currently down about 1%. Of course, we're awaiting results from TSMC as well. SK Hynix, SMIC, Hua Hong Semiconductors currently in positive territory, reversing some of those losses which we saw yesterday. Well, let's get more on ASML's earnings call and bring in our tech reporter, Annabelle Julius and Sydney and Bell. What stood out?
Well, it was really just more context. Given we'd had those grim numbers about 24 hours earlier, why have we seen such a big drop in sales in the third quarter? And we got some more details on that. And it points to the sort of two-speed recovery that we're seeing in the semiconductor industry. On the one hand, you've got AI chips that are remaining hot. On the other hand, you've still got sales of so-called legacy chips, older technology that are used in things like cars, consumer electronics, and those are still weaker. And that's why we saw perhaps that lower guidance going into 2025, and the executive as well talking about how customers are pushing out their orders. Take a listen.
We continue to view AI as a key driver of the industry recovery with potential upside. We see other segments recovering more slowly than anticipated. The recovery will extend well into 2025, which is leading to customer cautiousness and some push-outs in their investment.
So some more details there from the CEO, but also part of the conversation or that earnings call that he was pressed on repeatedly was demand from China. And this as well is going to really account for the company's bottom line going forward, because in the past, we've seen China making up about 50% of sales. That's going to drop to around the 20% mark with export restrictions in place. And as well, mainland customers already having front-loaded their orders ahead of those new rules taking effect earlier this year.
So nerves in the chip sector, Bell, it makes TSMC's results later pretty important.
Yeah, that's right. It's certainly going to be something that really helps determine the trading theme or direction for stocks this week. Already we've had the figures put out because Taiwanese companies need to report sales figures on a monthly basis. So we know we're going to get some strong results later today. The question is really around what the company says in terms of profitability and then also what they share to the market in terms of their CapEx plans moving forward. Still, though, TSMC has been one of the major beneficiaries out of this whole AI hype or the boom in demand for AI chips, and it is expected to continue benefiting from that. There's also actually, I should mention, a sort of tie-up between ASML and TSMC because ASML, its biggest customer is actually TSMC, and our Bloomberg Intelligence team is saying that actually the bookings or that plunge in bookings for ASML could be a positive for TSMC in the medium term because it could remove some of the competitive pressures, and as well TSMC could actually be getting better at using ASML's most advanced machinery, and again that could be something that's positive for the outlook for the TSMC, for Taiwan's biggest customer or company rather.
That's right, and we saw that tie-up between AMD and Intel as well. Bloomberg's Annabelle Drulis, thank you. And speaking of AMD, it's offering a more upbeat outlook on the chip sector. Here's what their Executive Vice President and Chief Technology Officer, Mark Papermaster, told me in our exclusive interview.
The demand for compute is so explosive. So what you're going to see from a market standpoint is broad growth across all the factors of computing. We're definitely double-digit across our data center growth, and we're being announcing soon. We just closed our quarter, but if you look historically, we've been growing quarter over quarter, double-digit on an annual basis.
Let's get back to June Bailiu, Portfolio Manager at Tribeca Investment Partners, who's still with us. June, we're seeing, in a way, conflicting views from ASML as well as AMD. I'm just wondering where you sit on that. I mean, are we looking at a potential slowdown in the chip sector that is worse than anticipated?
Look, I don't think, in terms of overall chip, as we heard before, so the legacy chip is going through a bit of a slow recovery. But for the AI chip, we continue to see the demand continue to escalate and become very, very fast. So I think the demand for the AI-related chip, which is going to be, drive majority of the growth from here on, is going to be strong for the next 12 to 18 months. But the challenge for investors is that what do you pay for that kind of peak demand because we know the supply are coming at some point, probably 18 months away. So for us, the chip market is a harder place to really generate return, the likes of NVIDIA and others. But certainly the demand is still very, very strong.
Given what you have just said, June, if you don't play the likes of NVIDIA, is there another way of playing the chip sector? We know that there are new players in town, the likes of India, the likes of Malaysia, all getting into the act, all wanting to be a hub for AI, for instance. Is there another way of playing the chip story?
Oh, absolutely. I do think chip is the forefront. It's the first area of the benefit from this AI, phenomena. And then you got to play the whole supply chain. So what we like is data center. You require a lot of data center to process. And then aside from the data center, we can then move on to the power. You require a lot of energy to really supply, and the grid power and everything, and the infrastructure to deliver that energy to those data centers. Construction companies that are building those data centers, property trusts that own the data centers, as well as the software businesses that potentially benefit from it. And now we have actually started to see that 2 years into this, AI, growth, that we started seeing more specialized software providers into every sector, and to benefit from that. So, we actually see a huge amount of growth from the AI trend, not just in chip, because we certainly feel chip has run very, very hard whilst the demand is still there. As you know, the share market always look forward 12 months. So in 12 months, that chip demand may slow somewhat, and that the share price will become a little bit harder for it to justify. So play the rest of the supply chain, and there's a lot of opportunities.
Well, the thing is, the chip sector, tech sector has been caught in the crosshairs of U.S.-China tensions, and that U.S. election is front and center when it comes to risk. How are you assessing that risk in this whole discussion of the chip industry?
Yeah, I do think the chip industry has performed very well in terms of share price. From investor perspective, it is time to really take some profit. You know, as you talk to the election and the tension, and chip sector seems to be very, very sensitive to the trade conflict. And to us, because they've done so well, you know, it is time to take some profit and put into other sectors will benefit from, you know, for example, the cyclical upswing with the U.S. rate cuts, and around the world we'll see more rate cuts to come through, or you know, potentially other areas that will be beneficiary of the AI thematic, whether it's utility, infrastructure, and other space.
June, on a more personal note, we know that you're leaving Tribeca. You're setting up your own venture. Is there anything, any details you can share with us? We can start with the name, for instance.
It will come very, very soon. The name will be something very unique, and certainly it's not going to be Junbei Capital, but it'll be something that I will disclose to you in the next few weeks. So thank you very much.
So there's no way you can let us know the talent, the people who will be joining you, how big it is, any details at all that you can share?
Absolutely. I'd love to share with you. Look, we will have someone who's very experienced across the wealth space here in Australia. We'll be running the business and running distribution, whereas myself will be running a dedicated team of a few analysts and a dedicated dealer. And, you know, and then we will have a really great team dedicated to the fund that's, you know, at the moment $1.5 billion, and we will grow from here.
Okay, and we trust that you'll break it on Bloomberg fast. June, thank you. June Liu, Portfolio Manager at Tribeca Investment Partners. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back, and we're seeing a pop in terms of the SET index, currently up by about 2%. And just a reminder, we'll be speaking to the new SET president. Elsewhere in the market, China front and center, we're seeing losses for the CSI 300 index, but we are seeing gains for Chinese CPUs, OS stocks. They're rising on the back of that agency backed by the country's Internet Overseer. Is pushing for an investigation into Intel products sold domestically, and that's providing that support for those Chinese CPU as well as OS stocks. China, Great Wall Technology leading the pack higher by about 10%. Shenzhen Sunline Tech also surging, currently up by about 15% as we speak. And we're also tracking Asian nuclear shares. Take a look at where they are right now. Asian nuclear shares rising as Amazon, Griffin invest in that sector. We're seeing Jiangsu Shentong Val, for instance, higher by almost 6% right now. Ken Griffin announced those plans to back a $500 million investment in small reactors, and that's suddenly playing out here in the market. Paladin Energy up by about 10%. In the wider space, we're seeing gains pretty much across the board. We talked about the SET up about 2% right now. Remember that BOT cut rates unexpectedly by 25 basis points. Still to come, the president of the SET will be joining us for his first TV interview since starting his term last month. Keep it here with us. This is Bloomberg. Well, China has been swinging between gains and losses. Suffice to say, there's been a lot of disappointment on the back of the housing briefing. Let's do a check-in. Avril Hong on top of that story. Avril.
Traders assessing what we got out of China's briefing today, whether we saw enough support for the property sector. I think that depends on, as our Bloomberg analyst David Chu was highlighting earlier in the program on whether you are an economist or an investor, because there were some helpful measures that were announced, right? When you look at the expansion of the credit program, that whitelist to finish up some of these uncompleted homes, and then also their aim to renovate homes in so-called urban villages. But I guess as an investor, you would get that sense of disappointment because you didn't get that big bang stimulus, and the Hang Seng is well away from the session highs of about 2.5% in terms of gains. CSI 300 also looking pretty flat. Now, the other bunch of investors that look pretty disappointed from what we got today were the commodities traders for the board, as we saw iron ore as well as steel futures sitting pretty flat going into that briefing, and then we saw them extending declines towards the end of the briefing as well. And Brent prices also, we saw that erasing off the earlier gains. Flip the board again, because I also wanted to talk you through what we're seeing in Thailand and the Philippines a day after their central banks cut rates. Of course, in the Philippines, that move was expected, but what we didn't expect was that surprise cut from the Bank of Thailand. And indeed, it was seen as a hawkish rate cut because, as the BOT had outlined, this is not the start of an easing cycle. We saw gains on the baht just a day ago, a reversal of some of that today. We're seeing the extension of the stock market gains from yesterday, Has.
Avril Hong, thank you. Let's get more perspective on Thailand with Usadek Kongsiri, president of the country's stock exchange. This is, by the way, his first TV interview since he started his 4-year term last month. Usadek, thank you so much for joining us. We know that the BOT was clear to point out this is not the start of an easing cycle, but it is still a cut which people did not expect. How much of a boost do you think this will give to the stock market?
Well, if you look at the reaction from the market yesterday, it's obviously a good reaction from the market perspective. It helps align the fiscal and monetary policies within the country a little bit. And obviously it's not the whole problem, or not the whole fix. There's a lot of things that needs to be done together between the Bank of Thailand, the SCT, and the government going forward to help boost the economy. But in the short term, it gives a positive reaction. It gives an optimistic view for the last quarter for Thailand.
So as the president of the SCT, would you like to see another rate cut? I mean, after all, the government keeps saying that the economy needs it.
It's from an SCT perspective, I believe that the Bank of Thailand has measures and look at a bigger picture from economic perspective. Obviously for us, there's certain sectors of companies listed on the stock exchange that will benefit from this, especially coming into the fourth quarter. We've got tourism season coming in. We've got exporters uplifting their business. So the impact on the Thai baht, for example, is a very positive factor. And I think more importantly, the investors looking at the Thai market will need to focus on to see which sectors will benefit from this.
You talked about the listings on the SCT not too long ago. It was a front runner in terms of the number of IPOs in the country, but it's been pretty lackluster of late. What's the outlook for IPOs in Thailand?
Actually, it's quite positive at the moment. We've got, if you look at, well, in the data that we have, we've got 35 potential IPOs in the pipeline, in the works. The market uplift in the last 2 months obviously will be helpful, be supportive. A lot of companies that had delayed their IPO plans because of the market performance at the beginning of the year or even last year are now definitely re-looking at their timing. So we're positive, we're optimistic on that. We see a good pipeline coming in.
Talk to us about the pipeline. It is really about those large IPOs that we're after. What are you seeing?
We are seeing conversations of re-looking at the market for the large IPOs that were in the pipeline before. So I think at the moment, all the movements in the market, the positive movements, both from the Bank of Thailand, market participants, inflows of international investors. It's supporting a real serious relook at these big IPOs, and we're hopeful that they will come to market next year.
So how optimistic are you in those conversations? How many do you think we'll see in terms of big IPOs in a span of 12 months?
We're positively looking at 2 to 3 big IPOs. Depends on how you define big IPOs, of course, but it's the...
How would you
overall,
define a big IPO?
With the pipeline of maybe $1 billion potentially. But look, I think the focus that we have, we're looking to build a good breadth of industries across the pipeline, pushing or encouraging new economies. More importantly, the IPOs that we're seeing in the pipeline are looking to raise capital to expand their businesses, which is crucial to creating value, to creating a better future for their businesses.
We've seen a strong rebound in Thai stocks in the second half, so far at least. Do you think that is sustainable for the rest of the year? And what risks do you see?
Well, we're cautiously optimistic, obviously with the rate cut yesterday, with a more stable government in place, policies being implemented, the government budget being put into action, all positive factors. The next couple of weeks or few weeks, we'll have the earnings from the third quarter from listed companies. We're also optimistic on that based on the trend that we saw from the last uplift in the second quarter. So, and the tourism industry is coming into a season of high season. Overall, it's a positive view. The implementation of measures and, for example, the Value Park Fund that was listed a week or so ago, their funds are still being implemented or being put into action, which will take a while over the next quarter. The Thai ESG fund that was introduced by the government is also important. There's obviously tax incentives involved there, and we're hopeful that that volume will materialize in this quarter. So a lot of good factors.
Asad, we know that you just kicked off your 4-year term. What do you hope to achieve in that term? What's your top priority?
Well, the thesis that has been part of my, I guess, entry into the stock exchange or into this position to the board of governors has been to be inclusive, equality for all participants in the stock market of Thailand. A few main themes that integrated themes that we're pushing, and we're developing a strategy for the next short, medium, and long-term future is fairness, inclusiveness, so expanding our access to the market for the population and for the international investors community, reimagining ourselves for the future, see where we place or we should be in our standing across the region or globally, focusing on industries that are competitive in Thailand. For example, looking to be a listing hub in the future. On the regulatory side, we need to be balanced, we need to be dynamic. We're looking to continuously improve our regulatory frameworks to ensure that there's fairness in the market, there's good supervision, behaviors that are unwanted are properly dealt with, and encouraging, building on our strong position in liquidity, in IPO pipelines. Yep. And rebuilding or even enhancing the trust and confidence in the market.
a lot you want to achieve in the 4 years. Usadet Kongsiri, President of the SCTV, thank you so much for your insights today. Let's do a check on chip stocks trading here in the Asia-Pac region on the back of that disappointing projection made by ASML, where semiconductors currently down by 0.6%, extending the losses which we saw yesterday. ASML CEO saying that that slow chip recovery will go well into 2025. Now, staying with chips, U.S. chip producer AMD says the company is seeing progress in its race against major competitor NVIDIA. We spoke exclusively to Chief Technology Officer Mark Papermaster about the outlook for the industry as the U.S. considers capping AI chip sales to some countries.
We live in a very, very competitive industry. You look at our competition in x86. We set up a roadmap to bring a leadership capability, and now we have over a third of the x86 server market. So now you shift to data center GPU. We've competed for decades with NVIDIA in graphics computing, and we set our sights years ago to be competitive in the data center GPU. We started first in high-performance computing. We have the world's largest supercomputer at Oak Ridge National Lab in Tennessee. And we have many supercomputing installations across the world.
Can you quantify, though, how close you are to catching up?
Well, here's the way to think about it. We started in AI, building on that base in HPC with, I'll say some millions of revenue at the end of last year. So think about it as a very small starting point in data center GPU. Fastest growth of a new product in AMD history by far. We're projecting over $4.5 billion in revenue in data center GPU this year.
Some suggesting that for you to actually play catch up is to get about 20% of the AI chip market. When do you think you'll get there? Because they say that once you get there, you'll become, a real second player.
Well, I believe our growth will be much faster than what you saw on that CPU server trend that I just described. And there's a simple reason for that. You look at what companies are doing that fueled that growth to $4.5 billion this year. They're making strategic decisions, Haslinda. Hyperscalers and heads of enterprise infrastructure are deciding that they don't want to be locked in with one vendor in a proprietary approach, more like the mainframes of yesteryear. And so what they're looking for is choice, and they want a partner who's open. They're making strategic decisions to grow with AMD and have a platform that can be multi-vendor and that they can move to the vendor of choice, not be locked in.
Mark, before we let you go, you talk about how you're invested in data centers. It's sucking energy. We know that. And that is a big concern as the world, tries to get to net zero. How are you looking at it? And how do you see that shaping the energy sector? Some say perhaps, you can't get there without nuclear energy.
Well, you can see the recent news of Microsoft investing in a nuclear power plant. It's very clear that we will be energy gated to grow the necessary AI compute capacity if there's not innovation. And it will take all of us working together at AMD. We are driving massive energy efficiency into our chip designs.
Our exclusive interview with Mark Papermaster, Chief Technology Officer at AMD. Well, still to come, Accor Group CEO Sebastian Bazan joins us for an exclusive interview on the challenge of slowing Chinese consumption and how that may affect the Asian growth strategy. Keep it here with us. This is Bloomberg. Welcome back. China is, or rather Macau, is bucking the trend when it comes to weakening Chinese consumption. The latest data shows the daily average mainland Chinese visitors to the gambling hub during China's Golden Week jumped 35% from a year ago, and the overall daily average jumped 23% to hit a record high for the holiday period. Well, our next guest runs French hospitality giant Accor, which owns brands ranging from the luxury Raffles and Banyan Tree to budget chains, including Ibis in China. Let's discuss the China consumption theme with Sebastian Bazan. Good to have you with us. All of 20 hours, I hear, in my city. What's your take on consumption in China? When you take a look at the latest data, it shows pretty lackluster data, and it's not picking up the way people expected.
Well, it's getting better. It's being kind of actually negative. negative 5 to 10% for the first semester. It's less negative over the last few weeks, and it's going to be even lesser negative over the next few months ahead. So it's coming back. The one thing which is interesting about China is tourism within China will be likely positive next year from negative this year. And end of the year looks very good for outbound people leaving China to visit the rest of the world. So I've been told by Trip.com and others that we should be back almost at the 2019 level. At the time, 150 million Chinese basically left China to visit abroad. We're being last year at probably 50 to 60 million, and they've been telling me 120 million. So it looks good for Australia, New Zealand, Southeast Asia, and Indonesia. We're probably going to see a lot of Chinese visitors at the end of this year.
Again, we have been here before. That consumption expectation is not new. What's different this time around? And do you see the stimulus announced by China recently making that big difference?
Yeah, I think they've made the right decision. Maybe too late, but I guess it was not late enough. So they made the decisions. It's coming back. We see it for my industry. So, there's two countries for which you should never bet against. Happens to be America and China. So, yeah, they're going through some muddy waters, but I will go long China the next 2 to 3 years to come. They've made the right decision, and they have the right talents and the right expertise. So.
And, of course, you had your Greater China CEO saying that, Accor is betting big on China. What form might that take?
Well, we're betting big because it's going to be the largest hospitality market in the world, surpassing the US, probably in 5 years from today, no question, because of the population. That being said, we need to play. We're going to get bigger, faster, more brands. Are we going to make a lot of money within China? No. It's a very competitive market. Prices of hotel in China is a third of the same price in America. So in terms of operating models, this is not great to be in China. In terms of being present in China and big, you need it because you need those customers of China when they go abroad to have experienced your brands locally. That way they're going to be going to an Ibis, Novotel, or Raffles outside of China. So needs to play. Be careful how to play.
How are you playing it?
Well, we're playing it with the right partners. Don't go in China without a Chinese partner. The three guys actually are the huge hotel operators. The largest Jingzhang, state-owned. Second largest Huazhu, entrepreneur-led. The third is Beijing Tourism Group, state-owned out of Beijing. Play through the three of them. Accept to give them the lion's share in terms of fees. And they will be your growth factor, and then you're going to help them outside of China. So make the right bet on the right horse.
Sebastian, you can't look at China without looking at how it's impacting the rest of the region. Is China providing a drag to the hotel industry elsewhere?
Well, it's providing a drag when it comes to the last 9 months, certainly in Australia and Southeast Asia, Indonesia. But that drag is behind me. I'm telling you, it's going to be better and better over the next. So there's the next winter season, which is going to be in November. And it's going to play much better in 25 and 26, because what we didn't have in 23 and 24, as I told you, the 150 million Chinese customers will be back, and that is super sizable, including in Paris, by the way. They were 3.5 million like 2019, maybe 1 million last year. They will be back, and 3.5 million, and probably larger because of the Olympics.
So they will be back. Now, put that in global perspective for us. Asia versus the US versus Europe.
Well, we need to talk about India. The biggest bet to make in my industry is India. You have America, which was the largest bet 25 years ago. Then you have Europe 15 years ago. Then you have China for the next 5 years to go. And in between 5 years from today and 15 years, go big in India, because that will be surpassing China in terms of the largest hospitality market. Far more complex, far more granular. But this is a place where you have 40 million Indians traveling abroad. There will also be 150 million Indians going to Malaysia, Indonesia, Middle East. This is the place to play. How to play it? Probably likely like you'll be playing China. Find the right local Indian operator to go through. Difficult, but gosh, it's going to be very enjoyable.
But in terms of acquisitions, in terms of headcount, what are you looking at to play this India story?
Fastest growth for Accor is Asia Pacific. It's 50% of our growth factor happen to be in this region, which is why I'm spending a lot of time here. So it's human capital, there's plenty. Brands, there are plenty. You need capital. There's only 3 sources of capital in the world: America, Middle East Inc., Singapore Inc. This is where the money is. So first find the capital, find the appetite, go with them and find the local partner. So it's just a recipe that you have to go through and be there on distribution and loyalty programs.
You talked about the Middle East. Let's touch on that. Given the escalating tensions in the Middle East, is that impacting your numbers in any way?
No, it's so bizarre. And of course, it's a tragedy what's happening in Lebanon, certainly in Israel, in Gaza. but it's so awkward. We have a lot of hotel in Egypt, and Egypt as a destination is doing extremely well, including Sharm el-Sheikh, which is 300 kilometers from Tel Aviv. So it's one of those regions where you have a lot of actually people still finding safety, and they should, in Egypt. So no, so far we've seen no impact on the Middle East for us coming from the Israel disaster.
All right, just one final question. You are a French company, so
Yes,
I have to ask you
I'm
about...
a French guy as well. So
about the EU and expectations of that rate cut.
They need to go big. We need the economy to be back on its feet. So I hope they're going to go 50 basis points. It's not my decision. Likely they will. They understand that they got the inflation where they want it to be, probably even lower than what they want it to be. So it's time to be bold now, and it's time for the economy to come back.
So what do you think? I mean, what will they do, you think?
They're going to cut it by 0.5 point, probably next week.
And what are you anticipating in terms of, in the coming months?
We need to go back. We're never going to go back to the 1.5 to 2%, but we need to go back to the 2.5 to 3.5%. So it's going to take 18 months, but we deserve it. We're ready to play.
And that would make a big difference to how companies operate, like Accor?
Well, it makes a big difference to access to capital. The problem is about the hotel is we don't have enough supply. It's too expensive, cost of land expensive, cost of construction, interest rate. So we need interest rate to go back down, and we need lenders to actually provide capital. So we need a boost. But we have a 5% demand economy in terms of travel tourism. So we have 20 solid years ahead of us.
We will know soon enough whether they go big or not. Sebastian, always a pleasure to have you with us. Sebastian Bazin, Chairman and CEO of Accor Group. And it's India time. It's been trading for about 7 minutes now. Let's take a look at how the market's doing at this point in time. We have the Indian market pretty mixed right now. Sensex flat, but we're seeing losses for the Nifty index as well as the bank index currently tilting towards the negative. In terms of the rupee, 84.0175. India is a market that Accor is betting big on. We're also keeping an eye on Infosys and Wipro as the companies prepare to announce their results this Thursday. Infosys widely expected to raise its full-year revenue guidance closer to market consensus. Meanwhile, Wipro may report lackluster set of results as it struggles to win new contracts, and that's due to a tech spending freeze. And India's ambitions on the global stage also extending into space. In the premiere episode of our new series, Momentum, hosted by yours truly, I take a closer look at India's plans for the final frontier. India has officially joined the global space race with its Chandrayaan-3 mission, the first in the world to land at the rugged south pole of the moon. India is planning human spaceflight missions and even its own space station next. How much of it is geopolitics, though? Is India's own aspirations a counter to China's space programs?
Everything is geopolitics, so space is also geopolitics.
Can an Indian startup really compete?
So just like booking a cab, you book your rocket and you go to exactly where you want and whenever you want. So among the cabs to go to space, we will be like the most competitive.
The goal is to build a health monitor for the planet. If existing data from space won't cut it, let's build and deploy our own constellation of these hyperspectral imaging satellites that are 10 times or even 100 times lesser cost.
I'm Haslinda Amin, and this is Momentum. And you'll be able to catch the latest episodes of Momentum on Thursdays on Bloomberg TV and streaming on Bloomberg Originals. Before we go, let's take a look at how markets are faring. We're taking a look at those benchmarks in Hong Kong in particular. Let's take a look at how they're doing. We know that China, for instance, has been swinging between gains and losses, currently just a marginal high, 1/10 of 1%. The Hang Seng Index also marginally up. We have HS Tech higher by 1.3%. Never mind that ASML, I guess, caution that we had overnight. The Hang Seng Property Index, though, down by 1.3%. Disappointment from China. We were expecting some new measures, but again, not enough. China Developers Index slumping even more, currently lower by more than 8%. And we're also keeping an eye on EU assets on the back of expectations that we'll see a rate cut by the ECB, delivering perhaps today a 25 basis cut. Today, of course, we just heard from Accor CEO saying that, you know what, it needs to go big. It needs to reverse that slowdown that we're seeing in terms of its economy. It has to go perhaps 50. That is his own expectations. Euro dollar 108.52. We have the euro down about 0.1%. And this is how it's looking for the rest of the Asian market. That is it. From Bloomberg Markets Asia, Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.